The best dividend ETF in the entire world just got better. SCHD's up 1.2% already today, and on investing.com it shows that this ETF is a strong buy. This is because SCHD just had its annual reconstitution, and the changes that it just made are amazing for this ETF and for those that hold it. More than ever, and especially now in 2025, it's so important to keep yourself safe with a strong, low volatility ETF, and there's none better than SCHD in my opinion. 2025 started off quite rocky with the S&P 500 down almost 2%, the NASDAQ 100 down over 4%. But look which ETF has held strong. SCHD is actually up over 3% year to date, making it one of the best performing ETFs in 2025. And it's actually only going to get better now with this big change. In this video, I'm going to go over the changes that were made to this ETF, but more importantly, I'm going to tell you why this matters to you, the investor, and how I'm buying even more than ever now after this huge reconstitution. I'm going to show you some professional price predictions on where this thing could go in 1 year, and right now, SCHD is incredibly undervalued. My name is Nolan Govea, my students call me Professor G, and I made this channel to make investing simplified. So what changes were made? The great thing about SCHD is that if you invest in SCHD, each year the fund swaps out bad or low performing companies and actually brings in high performing or better solid companies for the fund. And you don't have to do anything. You just get to sit back, let it do its thing, and reap the rewards. SCHD's index reconstituted at the close of business Friday, resulting in 20 additions and 17 deletions. The index deleted Pfizer and BlackRock, while the addition ConocoPhillips is SCHD's new top holding. SCHD's changes resulted in 8% more energy exposure and 9% lower exposure to the financial sector. Shareholders should earn about 3.81% of a dividend at current prices. Importantly, SCHD retained its quality, value, and dividend growth advantages over other dividend ETFs. The new style and changes that just took place for SCHD is actually great for times when inflation is high, like in 2022. So this is just a great thing to keep in mind and why I'm buying and holding, and why you should also, because the things that are happening this year, things like tariffs and tax changes and a couple other policy changes, should bring higher inflation down the road. And so if you hold an asset like SCHD, which is actually supposed to do better in high inflation, that's going to be good for your portfolio. SCHD shows solid promise of retaining downside protection and is poised even better now to be the safer asset in your portfolio with a 5-year beta at 0.86, which is much less risky than the likes of S&P 500. For those of you using SCHD in the 3-fund portfolio, this is great news. Here's the list of new stocks or new companies that have been added to SCHD. Take a second and comment down below which one's your favorite. The ones making the biggest impact will be those top 5: ConocoPhillips, Merck & Co., Schlumberger, Target, and then General Mills. I'm particularly excited about ConocoPhillips because, as seen on investing.com, this company has a strong buy designation. It also has a fair value of $112.44, but it's only trading at $102 right now, giving it upside of 10%. It has a gross profit margin of 49%, which keeps it very cash healthy, and has a low PE ratio of just 13, and it has a dividend yield consistently over 3%, and has a consistent dividend payment for over 55 years. Because of these big changes, we can see SCHD about to blast off in the near future, especially as investors start changing from investing in the high growth ETFs and stocks to moving over to high value ETFs and stocks. With all this uncertainty in the macroeconomic environment, SCHD is the one that's going to take over. On tip ranks, analysts agree that this ETF is so undervalued. Right now, SCHD is trading at $28.10, but on average, professionals at the very least believe that it should be trading at $31.44 within 1 year, which would be growth of 11.92% in 1 year. Plus that dividend yield of over 3.5% puts the total return over 15% in 1 year. The more bull case that many actually believe could happen puts SCHD at $36.28 within 1 year, which is over 28% growth in just 1 year. All right, so what was deleted from SCHD? The big ones here are those top 3. That makes a huge difference in SCHD. Pfizer was a big piece of SCHD, and a lot are happy to actually see them gone. There are mixed emotions about BlackRock, but I'm overall happy to see them gone too. US Bank Corp was a bit of a surprise to me, but overall all of these deletions make sense when I go back and look at their financials. Remember too, sometimes these deletions happen just because the sector overall was too overweight and not necessarily that the company was terrible, so keep that in mind. SCHD was too heavy in financials, so they trimmed that up a bunch. Remember, the whole point of all of this and just investing in SCHD in general is to get that cash flow long term. You want to reasonably expect that you're going to be getting that cash flow for the long term. It also brings down the volatility within your portfolio and keeps you much safer. But the huge thing that we're starting to see here is that SCHD isn't just a safe ETF and it's not just a cash flowing ETF, but the growth in general is actually pretty amazing. SCHD's winning formula is the quality and growth. The ETF selection process prioritizes companies committed to rewarding shareholders through sustained and increasing dividend payouts. To be eligible for the fund, a company must have a history of at least 10 consecutive years of uninterrupted dividend payments. This strict requirement eliminates companies with inconsistent dividend histories or susceptibility to economic fluctuations. This ETF is just different than its dividend peers because with other dividend ETFs, you get a solid cash flow, but like no price appreciation. Or in other types of ETFs, you get a lot of price appreciation, but it fluctuates all over the place. One week you could be up 5%, the next week you could be down 10%. SCHD holds its value very, very solid. The new reconstitution that just happened just reinforces this and makes it even stronger. SCHD's historical performance reveals the ETF's legacy of consistent growth and market-beating returns. According to the fund prospectus, since its inception on October 19, 2011, the ETF has delivered an impressive average annual return of 13.4%. This performance surpasses the broader S&P 500 index, which has averaged approximately 11% over the same period. Many people see the lackluster returns of SCHD, especially when you compare it to something like QQQM or any of the other growth ETFs. When you look at those two side by side over the last 3 or 4 years, yeah, the growth ETFs have been crushing it with the AI boom, and there's really very little technology in SCHD. But when you zoom out and look at the entire picture, SCHD has been very consistent and has actually grown almost like a growth ETF, but also with cash flow. Many dividend ETFs prioritize high current yields or focus exclusively on undervalued companies. However, SCHD takes a more balanced approach, carefully selecting companies based on a combination of factors that include a history of consistent dividend growth, robust financial health, and the potential for future earnings growth. This well-rounded strategy, combined with its exceptionally low expense ratio of 0.06%, allows SCHD to deliver strong total returns, often exceeding the performance of its peers. By emphasizing quality, growth, and value, SCHD offers investors a compelling path to building long-term wealth while enjoying a steady dividend income stream. SCHD is a buy and hold forever in my portfolio and is definitely one of the largest holdings in my entire portfolio. To see how it fits in the best 3-fund portfolio on the entire planet, and to see what type of percentage would make sense for you based on your age, because it does change as far as how much you should put in your portfolio, watch this video here. Or watch this one to keep you going strong in your investing journey, and remember to keep investing simplified.